Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates. 10-year note yields remain elevated. Recall over the last 7 weeks, we've seen a pretty tight weekly settlement, somewhere between 233 and 237. Well, this week we're going to get a weekly settlement well outside of that range. We're looking somewhere around 247 to 250 after the big week we've had, after the big sell-off in treasuries. And I think that right now we're kind of at a moment where we're going back. We've got to go back to March to see levels that we're seeing today. And the market, while it does have some momentum to continue this trend, it seems to be stalling a bit, possibly because of the holiday weekend, possibly because of year-end. There's a couple of reasons why we may need to see this. Any extension may not come until after the first of the year. But I think that we've seen a big move in treasuries. A lot of that has to do with inflation and the Fed. However, it may be stalling here, at least over the short term. And if you look at market volatility, yeah, we've seen an uptick in market volatility in treasuries, a welcomed uptick, I should say. But we're still well below the levels we were at back when the president nominated Jerome Powell for Fed chair, which I think was the real period for volatility over the last several months. So we are still not even close to that. So right now we are seeing a modest uptick, but it really is just off the lows and doesn't really constitute any kind of market fear or something even bigger, despite the fact that we broke outside of the range. And if you look ahead, next couple of weeks are going to be quiet. We obviously have holiday markets. We have a holiday this weekend, one next weekend. Very little data, very little Fed calendars out there that are going to really move the markets, which really highlights the next moment for the market, for the bond market, which will be the FOMC minutes from December, which come out on January 3rd. That will kind of be the moment that we'll see the next big trade, unless there's some unforeseen event. And recall that at the last meeting, there were some mixed readings on how current Chair Yellen gave her press conference. So it'll be interesting to see how the market reads. Typically, the Fed minutes have given the market more to trade on than the actual meetings themselves. So right now, the bond market hovering, kind of waiting, I think, for that next big trade. We are on the high yields, highest settle we've seen certainly since March, and we'll weekly settle since March, and we'll probably hang up here at least until we get into the first of the year. This is Todd Colvin coming to you from the floor of the CME Group.